Kenya is back at the trade table with China, just days after reports that Nairobi was holding back under pressure from Washington. Kenya has now confirmed a preliminary deal with Beijing. The move sends a clear message. Kenya is playing both markets without committing to either. The agreement will reportedly give Kenyan goods duty-free access to Chinese markets. The deal is not yet final, but Nairobi says it's a step toward widening their trade relations at uncertain economic times. Kenya's trade ministry says the so-called early harvest deal is worth nearly $1 billion. It grants duty-free access to 98.2% of Kenyan exports entering China. Officials say the deal could boost agricultural exports, including tea, coffee, avocados and fresh produce. No final product list has been released, and talks are now moving toward a full bilateral trade agreement.
The introduction of zero duty-free access will unlock vast economic potential for Kenyan exporters, allowing for diversification of our export basket, especially in the agricultural sector, which is the mainstay of our economy.
Well, analysts say the timing of this deal is not accidental. Kenya is trying to rebalance its trade relationship with China. According to reports, Kenya's trade deficit with China hit more than 475 billion Kenyan shillings in the first 9 months of 2025. That is nearly $3.7 billion. In simple terms, Kenya buys far more from China than it sells, and that gap has become a political pressure point in Nairobi. Kenya's president, William Ruto, has defended deeper ties with Beijing, arguing Kenya needs greater access to Asian markets to correct the imbalance. He pushed that message during his state visit to China last year, with Kenya signed multiple agreements spanning trade, financing and infrastructure. But this China move comes as Kenya also seeks to stabilize its position with Washington. Earlier this week, reports emerged that Kenya had delayed final approval of a China deal amid US pressure. At the center of that pressure was the African Growth and Opportunity Act. For 25 years, AGOA allowed Kenyan exports, including apparel, to enter the US market duty-free. When AGOA expired in September 2025, Kenya's apparel exports were hit with tariffs of up to 28%. Thousands of jobs were suddenly at risk. But the equation has shifted again. The US House of Representatives has passed a bill extending AGOA by 3 years. Kenya has welcomed the move, calling it a critical lifeline for jobs in its textile and apparel sector. Kenya says it also plans to use AGOA to diversify exports beyond textiles, targeting coffee, tea and horticulture that would put small farmers and service exporters directly into the US market. In a statement, the Trade Ministry said an AGOA extension eases uncertainty and restores confidence for investors and manufacturers. Officials add that talks are also underway on a separate bilateral trade agreement with the United States. Kenyan officials insist this is not about choosing sides. They say it's about putting Kenya first by keeping multiple trade doors open as global powers rivalries intensify.
We see no tension between our concluding a market access arrangement with China on one hand and our robust push for AGOA reauthorization, as well as a separate bilateral trade agreement with the United States on the other.
Well, analysts say for Kenya, the strategy is straightforward. Keep China engaged, keep the US invested, and avoid being locked into a single economic lane in a world that is forcing countries to pick sides.
The world doesn't fit in boxes, so why should your news? From battlefields to negotiation tables, from internet outrage to real-world injustice. The conversations everyone is having and the ones they're avoiding. It's the same show, but this new year, Firstpost America gets a new look. I'm Kerry Johnston, and this is Firstpost America.